All righty, kids. Today is Tuesday. Is it only Tuesday? The 8th of April, 2025. And are we having fun yet? So, I'm just looking for those who are trading. The S&P, and clearly the market started up very strong today. On the back of yesterday's sort of reversal day and just gapped higher, and for at least part of the morning was going pretty well, and then obviously turned and failed. The S&P lost 365 points from high to low today, and then in the last 10 minutes it bounced 90 points. 90 points used to be a big day. Used to 3 weeks ago. The Dow Jones Industrial Average, 2,350 points from the high to the low today, and then bounced 600 points in the last 10 minutes. That's what we're in, all right? And that's why I keep saying again and again, this is a different thing right now, and you have to treat it as such. And certainly trading smaller is simple because with volatility higher, you trade smaller size. That's just simple math. But even besides that, we're in a different thing. So you know what? I'm going to start with the good news, or at least the potential good news, which is that the market did not take out yesterday's low, that Sunday night freak out low. Didn't even really come close. So that's good. I would say certainly anybody who tried to buy today, thinking that the low was in and that things were going to get better from here, probably did not hold on to that. So the amount of longs out there certainly is a lot less than it was this morning, because you would have been very hard to hold through a 2,300 point Dow drop. Or a 365 point S&P drop. Would have been very tough to do. So that's the good news, right? Possible good news. Not unusual for a low to have a day like that the next day after to try and scare everybody out. The market's not just going to give it to you. Here you go. Here is the low. Take it. Ride it all the way back up to heaven. Not just going to give it to you like that most times. And it certainly didn't give it to you on this time. Even if yesterday ends up being the low, it didn't give it to you this time. All right? So that's the good news. The bad news clearly is centered around this little boy, the bonds. The long bond has lost 7 full points in 2 days. 7 full points. 2 days. That's, again, not normal. We are not in normal times here. And I did hear stories today from some of the people on our Discord who are involved in the fixed income market that we're seeing a little bit of a seize up in fixed income here. Not just treasuries, but muni bonds, high yield, obviously, and even high quality corporate credits are not showing any sign of a bid whatsoever. And that is bad. We did have stocks and bonds and dollar close down today, and all of them were pretty weak. That's bad. Clearly, that's bad. That's an indication that nobody's putting money into the U.S. right now, probably taking money out of the U.S., and I don't know how the U.S. is going to fund its deficit if nobody wants to buy bonds. And that gets into the question of, well, the Fed's going to cut rates. If you are buying an instrument from somebody or that gives interest, are you more enticed to buy that instrument if the interest is higher or lower? I don't see how the Fed lowering rates is going to help attract money, right? Raise rates, it'll help attract money, net. Lowering rates, I don't see how that attracts money. So the Fed is clearly stuck between a rock and a hard place right now. And for those who are looking for the Fed to bail this whole thing out, I got a problem with it. What I believe they might do at some point, if in fact the fixed income markets and the credit markets are seizing up, they will have to provide liquidity in some form. But again, we've seen what happened. They provide liquidity during these other times, and it ends up being inflationary. They're going to have to do it if things ease up, but does that help at this point? Because if that is then taken as inflationary again, what's going to happen then? Who's going to want to buy bonds then? You know? I personally think the answer is they got to start raising rates. Call me crazy, but let's see how that plays out. But that's really the bad, horrible news is that, you know, we did see bonds find a bid while the stock market was sort of in its little crash last week. But it found no bid today while the stock market went into its little crash for the second half of the day. And, you know, there was a bad bond auction on top of that, which was apparently a very bad bond auction. But, you know, this is when the stock market really started to come down. It found a little bid for a little while, but bonds ended up closing on lows. This is not good, man. It's just not good. You know, that's really all I can say. NG. This is not the time to be fooling around. You want to play it against yesterday's low in the stock market? Okay. We held that today. You can do that. Make sure you stop out if it gets there. But the rest of it is not very good, you know. So it's careful time here, you know. The yen, once again, held below its new high. I don't know why. I don't know how. It keeps me short it, which has not worked, but hasn't really lost me anything either, because it refuses to get stopped out. Maybe tomorrow will be the day. I keep saying every day, maybe tomorrow will be the day I get stopped out of this trade. To this point, it hasn't happened. The Swiss franc, clearly the flight to quality, babe, worked today, right? That's really become the favored flight to quality here, right? As opposed to the yen. Look at the Swiss. Look at the yen. Look at how short the speculators are, the Swiss, coming into this. Look at how long the speculators were in the yen coming into this. Does positioning have anything to do with it? I personally think that it does. So there's that. And the metals, you know, went up a little bit today, although came obviously quite a bit off the highs. Both gold and silver. So, and energy got smashed today after starting out well with everything else. So this gas just got smashed today, you know. And the issue is we're sort of moving from, in my view, market-wise anyway, oh my God, Donald Trump did massive tariffs, more than anybody expected, sell, to now it's becoming a fixed income thing. If fixed income is in fact seizing up, and treasuries are going to go down. Remember, part of this was they wanted to bring rates down. So that was what was going to save the, the U.S. And I doubted those numbers in the report this week, but that was part of this apparently. So we were told. Well, if that ain't going to work, and bonds are going to go up, that I've talked about this a million times, but that is the market rejecting the whole idea. That is the world rejecting the whole idea. We don't want your bonds. We don't want your dollar. We don't want your assets. Screw you. Oh, but we'll cut rates. Oh, okay, that's going to incentivize me to buy them now? This could be a massive, massive problem. So that's where we got to be paying attention to, I think, more than anything, is the fixed income markets. If it can't rally, when risk assets are getting sold off, that is an indication that we could have a serious problem. And that's what's happened today, certainly. I mean, I could see yesterday, okay, bonds came off because, stocks rally. Although if you really look, yesterday bonds were coming off way before stocks ever rallied. But whatever, it came off, stocks rallied at the end of the day. You can say, okay, it was a risk-on day, so all the people that put their risk off on bonds got out and it went down. But today, there was no excuse other than a bad auction. But they were down way before the bad auction ever happened. Okay, is what I'm trying to say. The bad auction was, in this time frame. All right. So it didn't help. But this was not the bad auction. This was the stock market selling off massively. So again, I think this is the main thing we have to pay attention to. This is where the real danger is. So I would keep an eye on that. And no matter what you do, I'm still begging everybody, play small. There's no reason to play big here. The volatility has quadrupled, quintupled. So you should be playing 1/4, 1/5 size. All right. This is not the time to be a hero. All right. So those are my thoughts today. I hope that helps. I hope that everybody is surviving this. I know it's very frustrating for me. I can tell you right now. Not only because I don't have any trades. I have the 1 yen trade. I'm losing a very small amount of money. It's fine. But I am, my reads on what the market's going to do, like today, I wouldn't have thought this would happen. Right? I could see that the market would bounce. And I could see it making new lows at some point in a week or 2 weeks or a month. I didn't think this was going to fail like this again. This was, as much as I say it closed above yesterday's low, which it did, this was the new closing low in all these stock indices. The new closing low. I wouldn't have seen that coming. So that kind of frustrates me a little bit, but hey, I ain't losing money. So it doesn't frustrate me that much. All right. So anyway, please, questions and comments are always welcome. Please like the video if you like it. Check us out, CrowdedMarketReport.com. Check us out on Twitter and all that stuff. And we will talk again tomorrow. Hi, I just wanted to say, if you like these daily videos, we do them 4 days a week, Monday through Thursday for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.